I don't know how else to say this to you people at home. These are the last years of freedom. We're gonna have electric cars, which will be zone controlled, which will turn off if you go into the wrong zone. We're gonna have money, which they control completely and absolutely, CBDCs, which they can freeze any moment or only allow you to spend it on certain things. This is the beginning of the absolute end. We're entering complete tyranny and slavery. Nobody seems to give a shit. And you're all just sitting there going, yeah, well, I don't have time. I'm just gonna play video games. Like you're just walking into slavery, just waiting to die.
All right, Ripple XRP holders. So are we in the last years of freedom? And what do you need to do to prepare now? With XRP sitting at 50 cents, Bitcoin sitting at $27,600, what does this all mean for the rest of the markets? We're going to be getting into the XRP price chart in this video. We're also going to be talking about what the judge for the Ripple versus SEC lawsuit is deciding right now with denying the SEC appeal, and also the lawsuit taking a turn as the judge is now pushing for settlement talks on when that could be taking place. We're comparing XRP to Bitcoin on what happened during the last bull run, what lawyer Jeremy Hogan has to say for those that are confused about the SEC versus Ripple case, and the most likely case scenarios to happen next, how this lawsuit could be a distraction while behind the scenes they continue to offer XRP to institutional clients, what bankers are saying about digital currencies and regulation that's coming to the industry, the major steps that need to take place before the Great Reset happens, what Warren Buffett's portfolio is looking like, and why he is sitting on a $147 billion pile of cash right now, what that means for the stock market, the precious metals market. I'm showing you some deviations that I spot in the 2-year treasury yield, signaling what could be happening next when we compare that to the 10-year treasury constant maturity minus the 2-year treasury constant maturity, Bitcoin stock to flow, and other Bitcoin charts that you need to see that will give you a perspective of where we're going next so you can understand what will most likely happen next for XRP. So as always, comment 777 if you're feeling blessed, comment 777 if you're feeling bullish, and if you want to discover our best ways to make money online without any crypto trading experience and get access to the altcoin list of other projects that we're diversified in that we personally hold first before they're released to the general public, then go ahead and check it out on bullrunners.com. All you have to do is put in your best email address, and as soon as that list is released, you will get it first for free. Again, this is not financial advice. Don't buy, don't sell anything. But if you want to see the assets that we personally hold in our portfolio for this next bull run, then make sure to check that out at bullrunners.com. As always, let's run it. All right, bull runners, welcome back to the channel. So we're looking at the XRP to the US dollar price chart. XRP sitting at 49 cents right now. We did see a dip from 50 cents all the way down to 46 cents as XRP retested this zone of support right here. On the RSI, XRP sitting at 41 right now. And as we can see right here, if we look at this support on the RSI, all the way back to August of 2022, when XRP came back down to roughly 30 on the RSI, we saw the price for XRP was right around 31 cents. The last time that it was below 30, other than post-lawsuit on August right here, when you can see it dip well below 30, was all the way back in June of 2022 for the low of the year during the bear market when everything was happening. And now we are seeing XRP at 41. So could we see XRP, trade further to the downside within this support range and then see a bounce off of this upward trending support? I think that would be the most likely case scenario to happen next before we see a massive XRP breakout leading towards the end of this year. And I'll be talking about why I believe that and what I feel is going to be happening next when we look at important indicators on this channel. And also we see XRP draw down towards 30 on the RSI, and we see whales start to step in, back up the truck, and purchase more XRP. Now, I'm not going to tell you to buy XRP. Don't sell XRP. Watch this video for learning purposes only. Obviously, this is not financial advice, but regardless of whether XRP goes lower or we see a breakout earlier, it's important to have a plan ready before 2025. Check this out.
The protection and the dominion of this power alliance. The gains have been substantial.
Listen.
Both for ourselves and for you, the human power elite.
Remember when this movie came out in 89? 89 this movie came out. Listen.
You have given us entree to the resources we need in our ongoing quest for multidimensional expansion. And in return, the per capita income of each of you here tonight has grown, in this year alone, by an average 39%. I've just received word that our forces have won a major victory. The underground terrorist network has been destroyed here on the West Coast. We are all crisis alert. the situation is normal again.
So it's kind of funny how Hollywood movies, they tell us the plan right before it happens, and usually they tell us years in advance. That movie was made, like 1989 or something like that. So they've been planning this for a long period of time. So what's happening with this lawsuit right now is a show. The judge sided with Ripple again, denied the SEC appeal. So for those of you that missed on that, October 3rd, about a week ago, the United States District Court Judge Annalisa Torres, she rejected the U.S. Securities and Exchange Commission's motion to appeal its loss against Ripple Labs. And immediately after this appeal was rejected, the XRP price surged nearly 6%. But what gives? Why wouldn't it surge more? Why hasn't XRP gone back to its all-time high? Obviously, we're facing a liquidity crunch right now in the markets with the Federal Reserve, but this lawsuit is taking a new turn now as the judge is pushing for Ripple versus SEC settlement talks. And so the judge has directed both Ripple and the SEC to work out a possible settlement. Now, this is set for April 16th of 2024. How interestingly enough, Bitcoin's halving is around that exact same time frame, and both parties and their legal representatives are obligated to convene for an in-person meeting. The meeting must last at least 1 hour and explore the chance for a settlement. And so, will they settle? Will they not settle? When we look at what happened with Bitcoin, surging after December of 2020 to the all-time high of roughly $60,000+, we saw XRP cut short from its all-time high. So if we were to measure where XRP topped out at in comparison to its all-time high, it was 78% off. Where if we were to measure how much further Bitcoin went than its all-time high, Bitcoin went 252% further. So the fact that XRP was cut that short and we're still sitting at 49 cents compared to, $3 plus for XRP, it just goes to show how much more of an upside there is for XRP for this next bull run in comparison to Bitcoin. Sure, I do believe Bitcoin's going to do well, but I do believe XRP and other altcoins are going to do even better. So that's why if you guys want to see what we hold, go to bullrunners.com right now while you're watching this video, put in your best email address, and as soon as that list is available, we'll show you what we hold. Now, that doesn't mean you should buy the same thing. It's just showing you what we'll have in our portfolio for this next bull run and what industries we're the most bullish on. Now, looking at what Jeremy Hogan has to say, he's seen some confusion as to what could happen next in the case. And so he's outlined the possibilities to provide you guys with some more clarity. And so the judge issued a summary judgment and denied an early appeal where the SEC has a 100% right to appeal when the whole case is finished. And that will happen when there is a final judgment if they don't settle. As you will see, the SEC has no real good options here. And Ripple is just a ticking time bomb, right, waiting for XRP to go camping on the beaches of the moon. So possibility number one, the SEC moves forward with trial next April against the individual defendants. And the chances he's saying is 39.456%. I don't know where he gets that percentage, but according to Jeremy Hogan, the judge has left only the hardest part of the case for trial. The SEC could easily take an L at trial and have some of its dirty laundry aired at the same time. If the SEC goes to trial, an appeal of the case won't be filed until 2025. That means that an appellate ruling likely won't come out until 2026 for this scenario. Then, even if the SEC wins on appeal, the case would most likely be remanded back to Judge Torres for further litigation. And so that's not a good scenario, waiting until 2025 or 2026. So the SEC wants to push the entire case to trial and then appeal the parts of the judgment against Ripple it doesn't like. Fair enough, but the most likely outcome in that situation is a final resolution in 2027, roughly June 14th to be exact. So good luck with that. That would be terrible. That would be like what happened for this last bull run. Could XRP miss the next bull run and we have to wait until 2030 for something to happen when everything's fully implemented for digital currencies and CBDCs? Well, that'd be possibility number one. Possibility number two, the SEC could settle the case against the individual defendants and move forward with obtaining a final judgment against Ripple and then appeal. He's saying that this chance is 32.113%. This is the SEC's best option. For that reason, I doubt they do it because the SEC is not choosing the best options for themselves with Gary Gensler running the ship there. Settling out the individual defendants gets the SEC to the appellate court about 9 to 12 months faster and saves its resources and face by bypassing a very difficult and overreaching case. After settlement of the individuals, the case would go straight to remedies litigation. Now, remedies litigation still would require months and months to complete, which was part of the SEC's argument as to why it needed an early appeal. So this option would still go deep into 2026, August 14th of 2026 to be exact. Now, option number 3, the SEC settles all litigation against Ripple and the individual defendants. Yes, this could happen at the settlement conference, such as the judge required below, but the SEC has shown very little desire to compromise thus far. So settlement is a good option for the SEC. It gets to push another win and collect a big check from Ripple, aka the bad guys in their eyes. Right? The judge cleared this path for them by clarifying that a ruling only applies to the facts specific to XRP. So the chances of this happening is 18.98%, he's saying. And this date would be December 21st, 2023 this year. He says, finally, something else I haven't thought of could happen. Who knows? Chances of happening, 8.675%. As you can see, the SEC has a couple of bad lengthy options. Meanwhile, the summary judgment is the law of the land that can't even possibly change until 2026 at earliest, unless there's a settlement that they agree on earlier, which could potentially happen. But in that case, you can't sit around and just wait for that to happen. You have to have a diversification strategy. That's why go to bullrunners.com, guys. Check this out. And so I believe in XRP. We make videos about XRP every single day, but it's not the only asset that I hold.
All right, everybody, what's going on? Let me show you all some more supportive fundamental evidence as to why I have a firm belief that this whole entire Ripple versus SEC case is a freaking fugazi, whatever you want to call it, right? Check this out. October 5th, 2023. This is updated. Anchorage Digital and Eaglebrook advisors to offer crypto SMA platforms for wealth managers. This just came out. One of the largest SEC-registered crypto separately managed accounts, platforms, and institutional crypto platform, Anchorage Digital, announced a partnership providing financial advisors with streamlined access to crypto SMAs. The partnership provides financial advisors with secure and regulated access to digital assets through Anchorage Digital Bank, the only OCC chartered digital asset bank which meets the SEC's definition of a qualified custodian, right? So they're clearly registered with the SEC. They meet the SEC's definition of a qualified custodian. Here it says, after a recent SEC custody proposal, it is more important than ever for the RIAs to safeguard digital assets with a qualified custodian. As a qualified custodian, Anchorage Digital Banks provide the regulatory certainty that the SEC-registered investment advisors need to safely and securely participate in the new digital asset economy. And look right down here, it says, Anchorage Digital is a regulated crypto platform that provides institutions with integrated financial services and infrastructure solutions. And let's go over to their website real quick, okay? So remember, heavily involved with the SEC. Anchorage Digital, here you can see platform trusted by global leaders, blah, 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 right? And if you scroll all the way down to the bottom, this is the stuff the mainstream's never gonna show you. And you click right here, you click on assets supported. It's gonna take you to this page, institutional access point to a broad range of tokens. So I was like, I wonder if they offer XRP with this long list of tokens that they offer, right? Well, if you type up XRP, would you look at that? Supported assets, XRP. This, ladies and gentlemen, do you not see the problem, right? SEC registered crypto company right here. You guys see, okay? It is the only OCC chartered digital asset bank which meets the SEC's definition of a qualified custodian. How is the SEC suing Ripple for selling unregistered securities when this company offers XRP to institutional clients? Is anybody seeing a problem with this, right? Again, pay attention to detail. Smoke screen's a smoke screen, and call it when you see it.
So could this all be a distraction? It's very interesting, how companies like this making partnerships with Ripple, regardless of this, lawsuit going on. So let me know your guys' thoughts on that. And, Raoul Paul, who's a big Bitcoin bull, obviously believes in the power of XRP as well too.
Plays actually quite an important role. It's a money transmission network, and it does quite a good job of it. And it has deep connections with global governments around the world and has worked really hard on it. So there is a reason the chain is valued as highly as it is, and it's not from speculation, because actually, it got taken off a whole bunch of exchanges because of the lawsuit. It's actually because when I use my netcast law model, the amount of value that gets transacted on the chain is very high. It's being used. So I think if you lift the the legal issue, probability is that the value of the chain increases significantly. And, you know, as the world moves towards central bank digital currencies, I think the XRP network is going to be somewhere at the center of all of that.
Now, what is happening behind the scenes with big banks, you know, as they make massive partnerships with different technologies, like whether you see like Visa or MasterCard looking at companies like Solana, or they're looking at Ethereum, or they're looking at the XRP ledger, it's very obvious that digital currencies are going to be the future.
We're at a very interesting time period in the financial journey around payments. And why do I say that? We're at the cusp of actually taking payments from becoming a commodity to actually a product that's going to be deeply entrenched with data, that's going to drive more value for commerce in the industry. So if I think about the challenges multinationals, many treasurers today have, is really, how do I get my payments faster, with less friction, and actually almost like doing a domestic instantaneous transaction, but how do I do that for cross-border payments? So as a bank, what we're doing is we're relentlessly working on actually creating that instantaneous cross-border payment. But the exciting part is that cross-border payment is actually going to be followed with a rich amount of data and content. And if we get that right, the next era and intelligence around payments is here to harness. And that unlocks quite a lot of exciting opportunities for us to really have true finality of settlement, to have information, richer compliance data. We can actually get to the level where we can do smart contracts much more efficiently. It is actually going to facilitate commerce much quicker. So as a bank, that's what we're working on. It's pretty exciting. We've seen a huge amount of development. A year ago, there was a huge amount of activity around central bank digital currency pilots. Standard Chartered as a bank has dominated our pilots, and we've been part of every single pilot out there. The next part for us now to solve as an industry and as a bank is to say, how do we take it from pilot to really transformative business models? And if we look at the technology available with distributed ledgers, that's the opportunity for us to go next. We're also pretty excited in terms of what regulations and regulators are doing to develop the industry and actually bring forward a standard around digital currencies. And you know, once that maturity has been reached, actually I think we're going to see exponential take-up and growth in the world around digital currencies.
So before we see a flip of the switch, a great reset, there's some steps that need to take place. And according to Finance Lancelot, step one is a credit downgrade. So nations dump U.S. treasuries. That's what happened. Rate increase with the Fed. That's happened. Restrict swap lines causing dollar shortage. Staging an incident. That could be a World War III type incident. The dollar skyrockets. Panic spreads to financial system. Nations collapse. They print trillions and buy your cheap debt. Then the great reset as they shift over to CBDCs. Could it be XRP, the bridge currency? And then when would that happen? Regardless of when it happens, right now is the time that you have to prepare, because you don't just prepare in one day. You prepare every single day up until that day happens. Then you're ready for it. It's like basketball, right? You're not just going to show up to the championship game and then they flip the switch and XRP becomes, you know, makes you a millionaire, the first millionaire in your family tree. It doesn't happen that way. You prepare every single day and you subscribe to the channel, you like these videos, and you watch what the billionaires are doing. So what Warren Buffett is doing, he's sitting on a $147 billion pile of cash. So what does that mean? Well, that means it's not a buyer's market yet. There's no question that Buffett is not buying many stocks these days. That's apparent from how much cash he has stockpiled in his second quarter report. As of March 31st, Berkshire Hathaway, his company, their cash and their cash equivalents and short-term investments stood at about $130.7 billion. 3 months later, that amount had jumped to $47.4 billion. So why is he increasing his cash and cash equivalents? His quarter two regulatory filing also reveals that the conglomerate's net sales of stocks totaled nearly $8 billion. So why isn't he buying more stocks? Why is he a seller of stocks? It's almost certainly because valuation. Nearly every valuation metric you can find shows that the overall stock market is overvalued right now. So I've said in previous videos, I'm not touching the stock market. When we look at the Dow to gold ratio, this 100-year historical chart, the number tells you how many ounces of gold it would take to buy the Dow on any given month. Previous cycle lows have been 1.94 ounces in 1933 and 1.29 ounces in January of 1980. So what should you be looking at on this chart right here? Well, anything above 15 is bearish for stocks and bullish for gold. We're at 18.13 right now. Anything below 5 is bearish for precious metals and bullish for stocks. So we're not even close to 5. So that's why I'm bullish on gold and I'm bullish on silver as well too. Now that doesn't mean in the short term that silver or gold can't take a dip. It certainly can, but as a macro investor over the course of decades, I believe gold and silver is going to perform well. Now, where is Berkshire's money going instead? First, don't think that Buffett literally has $147 billion of cash just stuffed under his mattress or just hanging out in a bank account. Instead, Berkshire primarily parks its money in U.S. Treasury bonds. The company specifically stated in its Q2 report that $97.3 billion of short-term investments were in U.S. Treasury bills. What's more, if you read the fine print, you'll discover that $24.5 billion of Berkshire's $50 billion in cash and cash equivalents were invested in treasuries with maturities of 3 months or less. So 3 months or less. What does that mean? He's preparing for a recession. So when we look at the 2-year, the 2-year obviously shorter than the 10-year. Look at this right here, some deviations that we can see. So if we're going all the way back to September of 2022, when we saw a higher high, and a higher high when the 2-year treasury was all the way up at 4.859%, what we were seeing is a lower high on the RSI, the relative strength index. And also we are seeing a higher low, but we are seeing a lower low and a lower low. And so we are seeing this deviation take place where that signals a reversal was going to happen. And sure enough, we also saw a head and shoulders pattern where we saw the left shoulder right here in roughly October of 2022. We saw the head, we saw the right shoulder, we saw this neckline. The moment that we saw a break of the neckline, we saw a lower low happen on the price chart. We saw the price rally back up to retest the neckline, followed by another lower low. Simultaneously on the RSI, we were at 39 right here. Once we saw a break to the upside on the RSI, going back upwards of 50, we saw the price rallying, breaking through this neckline resistance that you can see right here, followed by one more crash to the downside, the RSI plunging down to 38, and then a rally on out of here. Now on the macro, if we zoom out, we can see lower highs taking place on the RSI. So if we go from September 2022, you see March of 2023, well, it's a higher high. This high now passed the high of November of 2022 for March of 2023, followed by a massive sell-off. But when in doubt, zoom out. So now looking here, we see a higher high on July of 2023, whereas a deviation on the macro, we see a lower high. So we can see this descending resistance right here on the RSI, where we see this ascending resistance right here with a higher high recently. And now we are retesting this upward trending support right here. So very interestingly enough, we saw a break of support on the RSI, but we're seeing the support hold on this upward trending resistance. So this rising wedge right here is not bullish. This is going to be bearish for the 2-year treasury because we've seen a break on the RSI, and at some point this is going to roll over and crash. Now, how low will the 2-year treasury go? It's anyone's guess. We can go all the way down to 4.382%. Maybe we come back down here to the levels of May of 2023, March all the way to May of 2023, all the way to 3.94%. And could that cause spike up into the positive territory, signaling the next market crash to take place? Well, as you can see, it wasn't when we were inverted that everyone had to worry. It's when we went in drastically into the positive that the markets crashed. Back during the subprime mortgage crash, 2007 to 2009 is when the crash took place. Well, we went from negative 0.11 all the way to positive 2.80%, which means that the 10-year was outperforming the 2-year, and that's when the markets were crashing. The time before then, the dot-com bubble boom, we were at negative 0.45 in 2000. By the end of 2023, which was the bottom of the markets, we were at 2.69%. So right now, the lowest, we were at negative 1.06%. So could we see a crash happen bigger than 2008, bigger than 2000, that sends this Treasury inverted yield curve into the positive, and by the time we start reaching back upwards of 2%, 2.2%, go all the way back to 1992, 2.4%. Once we get above 2%, then we see the bottom of the markets hit. Then we see Warren Buffett pounce and start to invest into stocks, into real estate, and start buying the dip. Because when that happens, and plus stacking on top of World War III, plus stacking on top of potential pandemics, plus stacking on top of the United States getting attacked, what would happen to all the markets? Well, the stock market would crash. Maybe crypto would crash too. Maybe precious metals would take a dip. Real estate would take a dip. Nothing would be safe other than cash. And then, like we say, obviously cash is trash. The spending power of the dollar is going down in value on a macro scale, but in the short term, could the dollar be the safe haven to have right now? to prepare yourself to be able to back up the truck for the dip. You guys let me know your thoughts right there. I see the tribalism of things, so you have to be unbiased and you have to know how to protect yourself in all scenarios. So obviously having some cash on the sidelines is a good move, simply because that's what billionaire Warren Buffett is doing. That's what a lot of massive investors are doing. They're waiting for one final dip, but they're dollar cost averaging as well too, without waiting for it to go too low, because you might miss out. You know, if you're waiting for this massive crash that never fills your limit buy orders at a specific price, then you never have an entry position into any asset or any cryptocurrency or even real estate. If you're waiting for the rates to dip lower, but the rates just keep going up over the next few years, then you miss out completely. So when in doubt, zoom out and just make more money, man. Focus on making more money, getting the front end right of your business. That's why you want to go to bullrunners.com so you can learn our ways to make money online when we launch our financial education platform. Now, CZ from Binance, the CEO, is saying the Binance added the Bitcoin halving countdown to our homepage. And here's his thoughts about the Bitcoin halving. And so he's saying that, number one, the few months leading up to the Bitcoin halving, from now, there will be more and more chatter, news, anxiety, expectations, hype, hope, etc. And so during hype and hope, that's when prices rally in expectations of the news. People buy the rumors, and then what happens? Number two, the day after the halving, the Bitcoin price won't double overnight, and people will be asking why it didn't. So then doubt will start to creep in. Most likely there could be a sell-off like there has the last times that Bitcoin halving took place. There was a correction on, before, or after, or near it. Number three, the year after the halving, Bitcoin's price, he's saying, will hit multiple all-time highs. And people will ask why? Because people have short memories. Not saying there is proven causation, and history does not predict the future. If you don't know what Bitcoin halving is, click on the question mark. And so when Bitcoin halving, demand increases, supply decreases. When there's a decrease in supply and increase in demand, generally speaking, no guarantees, that could cause price appreciation. Now, has that happened in the past? Well, let's look at the past halving. Yes, the answer is yes. Let's look at the past halving. The answer is yes. Let's look at the past halving. The answer is yes. So if the answer is yes, 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 what is the likelihood that the fourth time will be a yes? It is a higher percentage odds than a no. That's what you need to know. So right now, the halving based on the stock to flow, when the halving takes place, that's $56,000. The last time that Bitcoin was near the halving, it was above the stock to flow. The last time Bitcoin was above the stock to flow. The time before then, Bitcoin was drastically below the stock to flow. So on or near the halving, we could be roughly near $54,000, $55,000 by 2024. And then Bitcoin, Ripple XRP versus the SEC, we see some settlement, we see something happen with XRP, seeing some liquidity flow in. And then based on Bitcoin's MVRV score, I know don't focus on the complications of what these means. You know, some of these use complicated math. You know, market value is the blue line, the current price of Bitcoin multiplied by the number of coins in circulation. This is like market cap in traditional markets, or like share prices multiplied by number of shares. So number two is the realized price, which is the orange line. Rather than, you know, taking the current price of Bitcoin, realized value takes the price of each Bitcoin when it was last moved. So the last time it was sent from, you know, one wallet to another, it then adds up those individual prices and takes an average of them. It then multiplies the average price by the total number of coins in circulation. In doing so, it strips out the short-term market sentiment that we have within the market value metric. It can therefore be seen as a more true long-term measure of Bitcoin's value, which market value moves above and below depending on the market sentiment at that time, which is we're neutral right now. And number three is the Z-score, which is the red line, a standard deviation test that pulls out the extremes in the data between market value and realized value. Now, if we were to compare where we are in the past, you can see right here, you know, this green zone versus red zone in oversold or overbought territory right here. You can see when it reached the red, it was at the high, at the all-time high. And when Bitcoin, you know, reached the first peak, it was actually at the highest. So this was a massive deviation. Also, too, if we compare to the RSI, where you saw lower highs in the RSI, but you saw a higher high in Bitcoin's price, it means that a reversal is coming. Just like a reversal is coming with the treasuries, the 2-year treasury. We're going to see a massive dip, and then we're going to see the inverted yield curve flip into the positive. I've been talking about this. You guys are prepared. That's why you're subscribed to the channel, and you're getting ready for this dip. Now, don't be surprised if that dip hits the crypto market too, hits the stock market, hits the precious metals market, just don't be surprised. That's why having some cash is good on the sidelines to be able to back up the truck for the dip. But looking right here, we're relatively low. We're between 0 and 2. We're closer to green than we are to red. So historically, it's not the best time to buy, but historically, it's not a bad time. Even if there's one more shakeout event like there was for COVID to go back into the green zone, whereas the elite, plan, they use war for profit, which it sucks. It's inhumane. It's terrible, but you have to be aware of that. It's not saying that you should profit off war, but you should be aware of what's going on so you don't get wrecked. Okay, so Bitcoin, RHODL ratio. Now, what does this mean? Well, this indicator uses a ratio of realized value on the HODL waves, which is the hold on for dear life waves. Okay, so in summary, realized value HODL waves are different age bands of UTXOs, which are coins weighted by the realized value of the coins within each band. So the realized value is the price of the UTXO coins when they were last moved from one wallet to another. So RHODL ratio looks at the ratio between RHODL band of 1 week versus the band of 1 to 2 years. It also calibrates for increased holdings over time and for lost coins by multiplying the ratio by the age of the market and number of days. When the 1 week value is significantly higher than the 1 to 2 year, it is a signal that the market is becoming overheated. And so as we can look right here, the market is not overheated right now. The market is closer to the green. So regardless of the complications, you don't need to memorize the formula and how this is calculated. You just got to look at all these different indicators and see if this one lines up, this one lines up, this one's saying the same thing, this one's saying the same thing. If the majority, which is over 50% or even over 80% or over 90% best case scenario, are all saying the same thing, that we're either undervalued or overvalued, that will give you a good portfolio strategy on what you should be doing at the time. So we're neither overvalued or undervalued, but we are closer to undervalued than we are to overvalued. So on the macro, it is a better time to be accumulating right now than it is to be selling, but it's not the best time to buy. That's simply all that means. And so when we're looking at XRP right now, XRP on the money flow index is sitting at 58, whereas on the price chart, we see this uptrend while XRP is seeing a sell-off right now. So I'm expecting XRP to see a further sell-off to the downside, all the way down potentially to 40 cents, 42 cents down here. Like I said in previous videos, anything below that would be some type of shakeout event for World War III scenario, for a lockdown, and then scare the crap out of everyone, right? If you were the government and you had all the money and all the power in the world and you just wanted more money, more power, what would you do? Well, you would scare the crap out of everyone to shake them out of their portfolio, shake them out of their position, so you could accumulate as much of their bags as possible to accumulate more power, accumulate more wealth, because they use fear as a tactic to scare everybody into poverty. They want to scare you into poverty so they can become wealthier, and the wealthier they become, the more power that they gain. So now you watching this video, subscribing to the Bull Runners channel, you're gaining more power, you're gaining more wealth, you're gaining more wisdom to be able to back up the truck all the way to the bank, grab the bags, packing them, stacking them, leaving no bags left behind, because we believe that the spending power of the dollar will continue to go down in value over time on the macro. That's a fact based on inflation. Blockchain technology, distributed ledger technology is going up in interest. That's the truth. And together, we're all going camping on the beaches of the moon. I will see you on the next video. I will see you on bullrunners.com, where you'll learn our #1 way to make money online without any crypto trading experience. And if you want to get the list of which assets we're holding for this next bull run, before and after the Great Reset, on how to protect yourself, protect your family, protect your future, and protect your freedom, then check out bullrunners.com. And as always, you know what to do. Stay bullish.